Hello, and welcome to this week's episode of Coinscrum Markets. I'm Nisa Amoyals. Coming up, CoinList Matthew Jobs Duval looks at the markets this week in crypto RFQ. I'll be speaking to BlockFi founder and CEO Zach Prince. Philip Gradwell from Chainalysis reveals more insights directly from Bitcoin's blockchain. And Tina is joined by Kristen Smith from the Blockchain Association out of Washington, D.C. First, a look at this week's blockchain industry news. The Bitcoin price saw a sharp yet brief sell-off yesterday when 40 Bitcoins that had never been moved since they were first mined back in 2009 were sent to a new address. It's widely assumed most Bitcoins were mined by Satoshi Nakamoto himself at that time, raising concerns that a larger number might suddenly be moved and liquidated. The panic abated, however, when analysts quickly assessed that these particular coins didn't align with certain mining patterns that have previously been attributed to the enigmatic developer. Much anticipated third Bitcoin halving passed by smoothly last week, with the network hash rate falling some 20% in line with expectation, as many old generation mining rigs became uneconomical to operate as the Bitcoin block reward was slashed in half overnight. But with the Bitcoin price bouncing back after an initial fall, the overall impact on the network has so far been minimal. Just as Bitcoin miners adapt to this new normal, Hong Kong-based futures exchange FTX announced the launch of their new hash rate futures contract, hoping to attract business from the $6 billion mining industry as a way for them to hedge their risk. Early signs are positive, with around $1 million of contracts changing hands in the first 24 hours of trading. You may recall back in 2017 when JP Morgan CEO Jamie Dimon called Bitcoin a fraud and threatened to dismiss any member of staff going anywhere near it. This week, however, the bank took an opposite approach and announced that it's to extend banking services to US Bitcoin exchanges, Coinbase and Gemini. The World Economic Forum published a report looking at how the deployment of blockchain-based solutions can address the supply chain inefficiencies and failures that have been exposed by the COVID-19 pandemic. The WEF has also launched a blockchain deployment toolkit to enable smaller players to deploy as well. The toolkit was in development for over a year and saw contributions from more than 100 public and private entities spanning 50 countries. The WEF has found that consumers are demanding a totally new level of transparency now, and the supply chain is rewarded when the transparency and sustainability is there. Finally, hot on the heels of legendary fund manager Paul Tudor Jones' recent announcement to his investors that he'll be buying Bitcoin exposure via CME futures contracts, US-based FalconX announced they're coming out of stealth mode by closing a $17 million seed funding round for their best execution and prime brokerage trading platform, perhaps indicating that their investors, including Avon Ventures, Coinbase Ventures, Lightspeed, and Excel, see the institutionalization of the crypto spot markets as a hot ticket right now. That's the news for this week. Next up, I'll be speaking to CoinList Matthew Job Duval to take a closer look at the markets this week in crypto RFQ. Today we have markets analysis from Matthew Job Duval from CoinList. Hello, Matthew.
Hi, Nisa. How are you?
Good. So what's happening in the markets?
Well, it is a weird time for markets, I think, globally and also for crypto. It is very interesting to see that a major macroeconomic event of the magnitude of coronavirus, which by some analysis is way worse than what we had 10 years ago when the crisis was really very focused on the banking industry. The market at large, equities, bonds, seem to be living in la-la land where everything is fine, where the vaccine is about to come out in production and in your local CVS, and that really people are ready to go back to work and consume as if everything was normal. So equities are down only 5% in the last 6 months when you look at the S&P 500, which begs the question, what exactly is going on? What are people thinking about? The unemployment rate is skyrocketing. Retail sales are, describe really the numbers that we've seen in the last few months. So the question is, when is the market going to wake up to the sad reality of the crisis we're currently in? Crypto, in the meantime, has shown a lot of strength, a lot of resilience. Yes, equities are down 5%, Bitcoin is up 20, but equities are profiting from a lot of life support provided by the Fed. It's not the case for crypto. So very, very impressive performance, but it kind of feel like everybody really is looking for the moment when the market wakes up and things really get priced in the market. That moment has not come yet.
Now, Bitcoin has been hovering around the same range since last week's halving. What do you think about what happened with mining and the mining difficulty rate going down?
Absolutely. It just made sense that a week after the halving, just as normal, the difficulty would be readjusted, slightly lower, only 6% lower. A lot of actors in crypto were wondering what exactly is going to happen. All these less efficient miners, are they going to have to turn off, completely shut down their rig and put the key under the door? Turns out, not really. The rigs actually have been more and more efficient year after year. We're in a very different situation now than we were in 2017. So the efficiency, of course, the more efficient miners get more profit, get more hash rate for the same number of rigs put in their warehouses. But the very high price of crypto keeps the lower efficiency miner in business. The difficulty being readjusted just makes sense. You must have some marginal cost miners who are going to turn off. But by and large, the system is working as planned. The mempool has not exploded, as some people would say it would. And really, the Bitcoin network is showing the same resilience it has shown over big macro events that we've seen in the past.
So on March 12th, when we had Black Thursday and the correlation or safe haven argument fell apart because there was a lot of margin taking. Mm-hmm. What do you think now about the correlation between the macro and Bitcoin?
Yeah, so it's something people have been looking more and more at, because it's true, it's a phenomenal argument. Look, if we have an uncorrelated asset class to everything else, to equities, to rates, to EM, that's the holy grail. Everybody wants that in their portfolio, because whatever the performance, an uncorrelated asset in any portfolio lowers the volatility and hopefully increases the returns, which is what any portfolio manager wants. Now, in times of crisis, like what we had on that day 2 months ago, all correlations always go to one. It does not matter which asset you're looking at. Gold came up just as much as equity, just as much as Bitcoin. So saying, oh, look, on that day, during those few sessions, that correlation went to 100%, that makes sense. That's what everything does. People are panicking. People are hitting the sell button across their portfolio. So I don't really see that as a big, oh my God, we completely failed the store of value narrative, which, by the way, is in its nascency. It's the very, very beginning for Bitcoin to maybe become an asset class. We're not there yet. Mm-hmm. Yes, GBTC has seen more and more inflows. Yes, institutions are definitely looking more and more at Bitcoin, the Paul Tudor Jones story and Renaissance and so many others. But this is still very much the baby steps of an asset class. So yes, the uncorrelation has not played out as strongly as we wish, but this has to be seen across weeks, not in the last couple of months. It has to be seen historically, and that's how our portfolio managers are going to look at it when assessing, should I add Bitcoin to my portfolio or not?
All right, Matthew. Well, thank you so much. We look forward to seeing what happens next week.
Absolutely. Thank you very much, Nisa.
As the crypto markets have drawn in ever more traders from traditional markets over the past 2 years, so has the demand for secure ways to borrow digital assets to help grease the wheels of hedge funds, liquidity providers, and other market participants. Last week, I caught up with Zach Prince, founder of lending platform BlockFi, to find out how they're positioned in this rapidly growing space. Welcome, Zach. Thanks for being here.
Hey, Nisa. Thanks for having me.
So given the aftermath of the coronavirus, is BlockFi participating in the recession?
I think you might have seen that in a tweet that I put out recently. We've stated publicly that we do not intend to participate in a recession. There's a lot of qualities about our business that make us very well positioned to operate in a time like this. We're a fully digital business. There's nothing that we need to do with our clients in person. Everything's delivered over the internet. Half of our team was already remote going into this, and now everybody's remote. But because we already had a partially remote team, we have remote work enabled as a baseline from a corporate perspective. And if there was ever a time for cryptocurrency to shine, especially Bitcoin, I think it's this macroeconomic environment. And for Ethereum, we're very bullish on the continued rapid adoption of stablecoins that we're seeing. So we're feeling great about the assets that we have on the platform. We're feeling great about the products and services that we offer for those assets. And we are, already back at the exact same growth rates that we were seeing prior to that single day of severe volatility in the crypto markets about a month ago.
Black Thursday,
exactly.
Well, that's great to hear. You've recently shifted your marketing from those that had already held crypto assets to those that do not, which requires more education. How are you executing on that?
Yeah, so we're still early days in that process. Part of it has to do with our product pipeline and how easy it is for someone that isn't familiar with how things work in the crypto world to buy their first Bitcoin using our products. And we're in the process now of launching a mobile app and the ability to support ACH payments, which is all coming this quarter. And as we go through that process and look towards launching a Bitcoin rewards credit card, we'll be ramping up our educational type marketing efforts. So today, a lot of the marketing that you see from BlockFi is related to, here's the interest rate that you can earn on your Bitcoin. And that's going to shift over the coming months to messages that also include, here's why you should own Bitcoin in the first place. Here's what a stable coin is. Here's why you should care. Here's why it's not scary. Here's how it can be a valuable part of a diversified portfolio, et cetera. So it's still early, but we're seeing a really great growth rate in terms of our customer acquisition metrics. And we're hearing great feedback from some of the earliest folks coming onto the platform about how easy we make it and how familiar it is, because an interest rate is an interest rate, whether it's on dollars or Bitcoin. So it's going really well so far.
Terrific. Given the bifurcated regulatory approach we've been seeing between federal and state government in this crisis, what do you think the regulation in crypto will look like, and how does that affect your business?
Yes, I think it's going to be more of the same. I'm, in general, someone that would bet against any type of massively coordinated regulatory effort, whether that's coordination between state and federal, or the different bodies of the federal government that could potentially regulate something. And also if it's, coordination on a global scale where, multiple countries need to collaborate to get something done. I think all of that stuff is really hard, and we don't anticipate any major changes happening, this year for the cryptocurrency regulatory environment in the US. And especially given that everyone's focus is now rightfully on health issues related to COVID-19. For our business, we already have state and federal licenses. So we're an MSB at the federal level, and we have lending and money transmission licenses at the state level. So we're very well set up to, we built the business for the type of environment that we're currently in. So, we're kind of used to it, and our view is that it's par for the course, and we expect more of the same.
So DeFi is primarily built on Ethereum, which you mentioned. What are your predictions for Ethereum going forward?
I'm really bullish on Ethereum. We're bullish on it for two kind of key themes right now. The first is adoption of stablecoins. Stablecoin market caps are growing tremendously. I think they've doubled over the last 3 or 4 months, from around 4 billion to now over 8 billion. The global demand for dollars that you hear about on CNBC in a more macroeconomic context is also hitting crypto. And what's interesting about crypto is that because you're moving the assets around on blockchain payments rails, you have global retail distribution built in on day one for dollars. And that's something that's never happened before. and it's something that's very, very powerful. Most of the stablecoin transactions that occur are running on Ethereum. So Ethereum is the settlement and payment processing network for this activity that's growing tremendously. So that's the first thing that makes us bullish on Ethereum. The second is just the ongoing development of the Ethereum blockchain and ongoing development of other applications, including DeFi, that are built on top of it. So you might see things happen this year, like Ethereum moving from proof of work to proof of stake, which would be a big accomplishment for that network. And I think you'll continue to see innovation and adoption across different spheres of application development, whether it's DeFi or gaming or other areas that are built on their platform.
I agree. So congratulations on your news about Three Arrows Capital coming into your most recent round. Do you think that this is a general trend showing APAC regional institutional interest?
Yeah, well, it's definitely something that we're focused on. You know, we're primarily U.S. based today in terms of our client and the business side of our company. But we're making a concerted effort this year, especially on the institutional side of our platform, to expand outside the U.S. market. So we have an announcement coming up soon about the opening of our London office. Shortly after that, we'll have an announcement about our APAC office opening. And so we've been, having conversations with folks, and we already have a couple of clients in that market. Three Arrows has been a client of BlockFi's for probably over a year now. We've had a great working relationship with them. They're viewed as a thought leader in crypto, not just in APAC, but in crypto generally. And we're thrilled to have them. We're thrilled to have them involved with the company. It was a very opportunistic transaction, both for BlockFi and for Three Arrows. So we're glad we were able to make it happen, and happy to have them on board.
So institutional clients are primarily market makers who do well in periods of volatility. What is your main message to them at this time?
Just keep doing what you're doing, and we're here to support you as your business is growing and doing well, and finding opportunities given the volatility that we're experiencing in the markets. We've been lending throughout all of this volatility at BlockFi, and happy to see a lot of our existing relationships grow and a lot of new relationships be established. Market makers love periods like this, and we just want to continue supporting their business however we can.
Great. Is there anything else you'd like to add?
No, I don't think so. This was a great interview, and I appreciate you taking the time to chat with us.
Thanks so much for joining us, Zach.
Thanks, Nisa.
We'll be taking a deeper dive into the mechanic of both Bitcoin lending as well as the emerging world of decentralized finance, or DeFi, in the coming weeks. Next, we go over to Philip for this week's on-chain reaction.
Thanks, Nisa. Welcome to On-Chain Reaction. I'm Philip Gradwell, the Chief Economist at Chainalysis, here to take you through what's been happening on the blockchain in the last week. Well, it's been a post-halving week. The Bitcoin price came close to 10K, near its year-to-date highs, but it hasn't had that post-halving, rocket to the moon that some people had been hoping for. So what was going on the blockchain? Well, Bitcoin flows into exchanges have actually started to decrease in the last week, and that is reversing the pre-halving build-up that we had seen before. So it looks like enough people have sent their Bitcoin to exchanges to sell, and actually people might be in more of a wait-and-see approach. The trading intensity, that's the ratio of the number of Bitcoin traded for every Bitcoin received on-chain, has continued to increase, and that suggests that there is still demand chasing the fewer Bitcoin that are now coming into exchanges. We've also seen that Tether has actually started to flow out of exchanges. It's not just Bitcoin. Again, we had seen a build-up in Tether balances on exchanges prior to the halving, so it suggests that that trend is turning as well. There's going to be fewer Tether available to be buying Bitcoin, so that might put a little bit of downward pressure on the price. but of course, it can always easily come back onto exchanges. I've also talked over the last few weeks about these trends of how Bitcoin has flowed between different types of exchanges. In particular, we've seen flows from crypto to crypto exchanges to crypto to fiat exchanges. This week, I want to take a slightly longer term view and put that in context. If we go back to the start of 2018, there's actually been a net cumulative flow of about 895,000 Bitcoin from crypto to crypto exchanges to crypto to fiat exchanges. So that means 895,000 Bitcoin have gone out of the balances of those crypto to crypto exchanges and moved to those crypto to fiat exchanges. So that's a really big structural trend that we have just seen continue week after week on on-chain reaction. There's also been a structural trend of Bitcoin moving from Eastern Asia to North America. In the weeks recently, I've kept pointing it out. And if we take that longer term view, going back to 2018, well, there's been at least 280,000 Bitcoin moving from Eastern Asian services to North America. And that's a lower bound estimate. So those long-term trends of crypto to crypto to fiat exchanges and from east to west, they're continuing this week. So overall, it looks like the on-chain response has been similar to the price response post-halving, positive but muted. The supply of Bitcoin and Tether on exchanges, well, it does look like it's starting to decrease, reversing a trend that we had seen prior to the halving as those stocks really built up on exchanges. As I just mentioned, the longer term trends, they don't seem to change. And so while we may now be in a world where there's half as many Bitcoin, it does look like the structural trends in the market continue as they have done for a while. Thanks. Tina, over to you.
Thanks for joining us. I'm Tina Baker-Taylor, and this is Governance and Guardrails, our weekly segment focused on all things regulatory and policy related in the crypto and digital asset space. I'm so delighted today to be joined by Kristen Smith, Executive Director at Blockchain Association. Kristen, thank you so much for joining us today.
Thanks for having me, Tina.
Now, I'm really excited about our conversation. So first, tell our viewers a little bit about Blockchain Association, who your members are, what you guys do, what's your mission?
Yeah, the Blockchain Association is a US-based trade association that consists of companies in the crypto community in the United States. And we have a mix of exchanges, projects, and early stage investors. And I think we're at 24 members right now. So it's a good group of companies.
Amazing. And so before we dive into this conversation, because I think let's set some context, you're talking about policy, and today we're talking about changing policy. How is policy different from regulation, or is there a hierarchy?
Yeah, so the mission of the Blockchain Association is to change federal US public policy for the good of the crypto ecosystem. And policy can be made really sort of in three different avenues. There's legislation that would ultimately, be signed into law that provides the agencies the authority they need to do regulation. Mm-hmm. There are some cases where you can actually use existing laws and existing regulatory processes to change policy in that way. Or as we've also seen, sometimes policy can be set by court decisions as, litigation works through. Exactly. That's never the ideal way to do it, because you're always limited to the facts and circumstances of a given set of companies, as opposed to having a full and open debate and dialogue about what the policy should be. So we want to see policy change happen at either the regulatory level, or in some cases, it might have to be the legislative level, because a lot of the US laws, it's really kind of a square peg in a round hole, and we might actually need some new authority to go to these agencies in order.
Indeed. We talk a lot about retrofitting and jurisdictions that choose to do that, and it doesn't always yield the results. There's some unintended consequences there we've seen happen. So some of us may still be thinking of digital assets and crypto as, unregulated, little government oversight. But I really think you and I have seen this change pretty significantly over the last couple of years. And I think that kind of has been in an ebb and flow, right? So as consumers and investors get more interested and become more aware, so do government entities. And one of the things I discussed with John Collins last week, or 2 weeks ago, was the legislative proposals that are showing up in bills that are referencing digital dollar wallets. So, that's pretty positive, that we have Congress people putting basically digital assets in bills that are being debated. But equally, in the same month, we had the SEC win a lawsuit against Telegram. So that's kind of punitive action. And so it does still seem to be feast or famine when it comes to how these policies are being created and the impact that they're having. So tell us a little about how you think policy is actually going to change. What are the elements that we need to focus on to really change the direction of policy development?
Yeah, so like anything in life, if you really want to have change, whether it be in business or government or anything, at a high level, it takes time and money. There's not often any go around by that. But in the policy context, I think there are three elements that if you look across any industry, if they have a combination of one or two or three of these pieces, you can get policy change. The first one is utility. I think there's a very classic case study of Uber being very useful, right? Everybody was like, hey, this is great. This is better than standing out on the street corner in the rain and calling a taxi. I can have somebody come straight to my house. I don't have to fiddle around for my cash or my credit card. That was something that was obviously and immediately useful to a large amount of people. And they were able to change all of the laws related to taxi cab commissions and whatnot in most jurisdictions because people wanted it.
Yeah.
Crypto has a problem in that outside of our bubble that you and I spend a lot of time in, most everyday people don't yet see the compelling reason as to why crypto is useful. Yeah. And as a result, lawmakers who are elected by these people don't necessarily care very much because they don't hear people talking about how great it was to transact in Bitcoin yesterday because nobody's really doing that. There are also, I think, a lot of obviously wonderful, promising projects that are under development, but again, it's not something that a vast majority of people use. But the good news is I think there are two other levers that can be useful in creating policy. One is relationships, and that is what a lot of organizations in Washington have been working on and doing for some time. Coin Center, the Chamber of Digital Commerce, we work on it as well. We are going and building the relationships with the policymakers, whether it be at the regulatory agencies or on Capitol Hill. And that takes time. You have to build up trust. It also
you're influencing the influencer, right? And so influence, has trust and elements of proof and demonstrations of those use cases that you're talking about that may not be there. And it seems to me like it's establishing a priority that isn't being driven by the first lever. As you were saying, if people in their jurisdictions aren't pushing for something, then who is going to be pushing for them? And that's where that influence starts to play a role.
Yes, and people want to help their friends. I mean, I know that's not how it's supposed to be, but people want to help their friends. And what I've seen other sort of smaller kind of niche industries do is, they are involved in the political process. They support policymakers and what matters to them. And in return, policymakers want to help them out when there's a problem. And the key thing about relationships is you can't build the relationships after the crisis happens or after you need something. You really have to do it before in order for those people to be there, because it doesn't happen overnight. But there is sort of a third element out there, and crypto, I think, has tapped into this a little bit, at least with the supporters that we have so far, and that is a compelling message. I think that policymakers are willing to step in if there is a compelling message that resonates with people. And I think, here we are in the US, we want the US to be a leader in this technology. That's a good message when lawmakers are out there, talking to voters, that they want the US to lead, they want to have jobs here. That's a good message. I think there are other good messages that we have about providing more competition and streamlining financial services. But I think the challenge we have in our message is that the underlying technology is so complicated to policymakers that it does take quite a bit of education to get them to grasp the message. But I do think ultimately we have some good messages there, and that has led to the group of supporters that we do have in policymaking circles that we have today. So yeah, it's a slow process, as you well know, but it's not an impossible one. We don't have to write the playbook; we just have to implement the playbook, and that's what we're doing.
So those, that group of people, those supporters that you have both inside the industry and outside the industry, it feels a little bit to me like it's really kind of going back to grassroots efforts, right? Getting people to care about something, getting people to talk about something, almost like building a community, which is very familiar to crypto participants. And so I think that the reputation is evolving slowly, but the crypto tribe can still be equated sometimes with, Lambos and living on island and, doing some crazy stuff, right? And I don't think that the industry has really nailed that value proposition that you were just talking about. Like, why is this important? What problem does it solve? And for who? Are policymakers primed to take this seriously, to take us seriously? Or are they just expecting shenanigans from the community? And if we want community support, what's that risk if we don't kind of step up our game?
Yeah, no, I think most policymakers today actually aren't expecting anything, but that they do often, if they do decide to engage, they get a smaller version probably of what J.K. Rowling saw. It's pretty intense, right? And it doesn't always translate into something meaningful for that policymaker. So I think the good news is, though, the crypto community is super passionate, and there is a lot of positive energy there. And one of we need to do is figure out how to translate that into something that's valuable for policymakers. And it's one of the reasons as sort of a side project that I've been involved with. HODL PAC is an organization that I helped get started here in the US, and it's in its early stages, and we're working to grow it. But the idea is, like, let's figure out how to tap into this passion and people who want to see policy change, but help translate it into the messaging that will be received well. And so, one of the reasons that Tyler Werde, who founded this, and myself really wanted this, is that is one of the missing pieces, because I worked as a staffer on Capitol Hill for 10 years, in kind of the first half of my career. The phone and call their congressman and tell them what they care about, and you get people who send in emails and postcards and letters, and lawmakers took that, they gauge that. They're like, what do people care about? How many people are calling in on healthcare? What do they think about this bill that's coming up for a vote? And if we can start directing some of this energy, not to attack people on Twitter, but to, hey, support this legislation, or oppose this one's bad, or reach out to this lawmaker, and start putting it in terms that the representatives and the senators are used to receiving, then I think that will help lead to legislative action or get Congress to put pressure on the agencies in order to do the right thing. So I think that there are some tools that are in place that are again, in the early stages, but starting to grow. But I think another thing that people can do if they're not part of a company who belongs to a trade association, but they want to get involved, is Coin Center is a fantastic resource. They're an independent organization, but they do wonderful work. We collaborate with them on a lot of things all the time, and so that's a really good place for people to become informed themselves, but also if they're looking to support an effort, I think they do a fantastic job as well.
Awesome. One last thing I wanted to touch on and come back to what you touched on was the fundraising. So, getting money in and putting it in place where it actually propels these policy progressive conversations. And certainly Holopack is looking to organize the way that we're talking to these policymakers in a more consistent way. So, I mean, kudos to setting that up, because I do think sometimes, the cats will follow you, the herding of the cats, if somebody starts, right? And I think it's like getting something started. But I think another thing that when we're looking at, an election coming up in the US is, targeting people in our community to either get involved in politics or fund people and raise money for congressional candidates that are going to be on our side when we get there, right? So a lot of the people that are sitting in government today are there because somebody wanted them to be there, right? So there's like Capitol Hill, how does that work?
Yeah, no, so fundraising, there's a lot of criticism of money in politics, which is understandable. I can say fundraising it goes back to relationships as being kind of one of the three levers you have to change policies. It is the easiest way to build relationships. And I can tell you all of these congressmen and senators on Capitol Hill also hate fundraising. They don't like to do it. It takes up a lot of their time. But the reality is if they don't do it, then they don't get reelected. So it's sort of a fact of life, and that there is a purposely way to give these contributions. And so, I personally give money to candidates. Holopack is raising funds in order to allow the community to vote to where those go. But yeah, most mature adult industries, they support their champions with political fundraising. And so if crypto, wants to be part of that process and see good outcomes, it's an unfortunate fact, but it's a tool that everyone else is using, and we're at a disadvantage if we're not using it too.
Yeah. Well, Kristen, I think we're probably getting close to being out of time. So before we go, one, thank you so much for joining me today. It's always super fun to chat to you. We could probably sit here for another half an hour.
We could do this for hours.
We could. But if other people would like to get in touch with you, whether to learn more about how they can get involved in Blockchain Association or Holopack, how do they get in touch with you, and how do they get in touch with Blockchain Association?
Yeah, no, you can reach out to me on Twitter. I guess I'm at KMSmithDC, or you can email us at the Blockchain Association. It's just Kristen, Kristin, at theblockchainassociation.org.
Great, thank you.
Name.
I can't wait to see you again and have a glass of wine someday soon.
I know, we are overdue. It'll be fun.
Thanks again for joining me, Kristen.
Great, thanks, Tina.
You're watching Coinscrum. I'm Nisa Amoyals. See you next week.